Hello everyone. Turnaround Tuesday has been canceled today. Hi Kevin, Joseph, Patrick, V, Yasser, Ziggy. So I'm sorry to announce Turnaround Tuesday has been canceled today. Everyone okay with that? Give me a Y if you're okay, that you'll make the adjustment. I know a lot of us look forward to Turnaround Tuesday every Tuesday. How about you, Zig? You okay without it? Oh yeah, it's Blake's birthday. I wish he was here. I'd sing the song. Maybe we should anyway. So I don't know how many of you guys follow me on Twitter, but I was watching the total eclipse in Oregon. It was the first place on the continental U.S. that they had totality. So I put out this tweet: solar eclipse reversal candidates, Euro, EG, Dixie. Have to give it 24 hours. So 2 of the 3 actually manifested. EG hasn't. It's still in the process, I think, of topping. So to me, that cancels out. That cancels out Turnaround Tuesday, which happens every week. And an eclipse would be more powerful that happens every century. So there's my astro stuff for today. Now I have to say one thing, and I've been texting this to my teammates. You know, I went to see the eclipse because everyone said that there would be coronas there. Okay. You know, all I saw was a circle around the sun. I'm asking myself, where's my corona with a lime? Did anyone get a corona with a lime watching the eclipse yesterday? Give me a Y if you did. Anyway, that's the last eclipse party. I'm bringing my own beer next time. They say there's going to be coronas and all you get is a circle around the sun. What a jip. What a jip. So, market-wise. So we're getting closer in the pound, guys. Still think under 28 is going to happen. I'm going to try and be patient here. But this candle right here in the euro happened right while I was watching the eclipse. So I don't think you can call it a bull flag anymore. As long as we stay back in the channel, this may be the shorting opportunity up here around 1780 or so, risking the highs. But kind of a negative look now. Perhaps, you know, Greg is looking for lower. Maybe it's going to be a flat. You know, have something like this starting from up here. If it's a quality, should take us down to this red line or a combination blues. This line right there. Kidding. So back under this low, the euro is going to be real vulnerable, is the way it looks. Similar situation in the Dixie. So the Dixie turned the same time, held the 93 level. So if we hold 93, I'm thinking this could be, we could get something like this from here. Maybe this is a flat too, and we haven't completed. And if we have a quality, this was about 150. 92.50, 94, and this would take us to 94.5. I think that's what Greg had talked about last week, and then look for another new low in the dollar. You know, just get one more pop. Like Steve was looking for, maybe this was ABC, and we're going to break down. Perhaps it's becoming more complex, and here's an area of interest at this moving average up around 95. Yeah. So anyone in here enjoying their time in face? I know it's the dog days of summer. Yeah? Who's become a better trader hanging out in face every day? Have you gotten better? Has it been an edge? Have you learned new things? You think so? Jess, after 90 years in the market, you could still learn? Jess started trading at 10. Oh, Scott, are you in Australia, buddy? In Asia? Oh, Texas. Oh, you like getting up early? You have a ranch? My life is like a farmer. Up before sunrise, asleep after sundown. Except that I nurture seeds of greed for the harvest of pips. I'm a pip farmer. How about you, Scott? What do you grow? You look the pre-market? Oh, good. You grow money? All right, let's see who's hanging out with me today. You know, Steve's still on vacation, but I bet he's here. He's a workaholic. Steve's not happy unless he's working like a dog. Oh, you're very welcome, Rob. You know, our mission is to build up and edify traders every day. So I know everyone on the team comes in here every day trying to help you guys, show you things you may not see, help you make better decisions, talk about what we do so you can learn from us, maybe avoid some of the landmines that all of us have stepped on in the Forex Analytics team. So Steve is here, but Steve has something. Stelios?
Dale, it's me.
Oh, hi, Steve.
I am here too.
Hello,
Oh, okay, and Sel, okay.
Unfortunately, he's here too, you know.
No.
We can't get rid of him, no matter how much we try.
We're getting close, Stel, we're getting close to your buy level and pound, you know, another 70, 80 pips.
Yeah.
It still look like a time you'd want to do it?
Yeah, I'm already short euro pound, a little bit out of the money, but it's okay. You know, it's I never claim to you know to catch the tops and bottoms.
Oh yeah, I saw.
I like these levels.
It's a pattern in play.
Yes. So, but I'm looking at the cable as well, and I think that's getting close as well.
Okay, yeah, 20. We talked about 27.50.
Jackson Hole might treat you well. Who knows? I mean,
you know what, Steve? I was looking at the S&Ps and I looked at some things like put call ratios and stuff, and maybe we get a rally back to 50, 55. I know some guys are looking for one more high. I don't know, but I think that we can at least. You see this 3 right here? I'd have a hard time being short.
As I said yesterday, Dale. As I said yesterday, Dale, especially the S&P and the Nasdaq have not had any real technical damage done to them. That's the honest truth.
Just the Russell and the transports.
Yes.
Do you look at transports?
No, I don't look at them, but since
Dow theory, they're supposed to lead the way.
I know. Since I follow a lot of people that do, I can tell you that I get a look at the daily chart of the transports at least a couple of times per week, through other people tweeting it.
Yeah.
These kind of indicators, we already have a decent amount of things telling us that this market is sooner rather than later going to turn lower.
Yeah, I'm thinking early September, Steve. Maybe the first week in September.
It's very likely, and if you remember, we started this webinar. We started with this webinar, and I started contributing here since day one. And if you remember, since then I was saying that I believe that this market rally is probably going to reverse this year, but it wasn't the time yet. That was what I was saying back then.
Now it feels like, I put out a tweet like this, Steve, guys like us that have been in the biz for a long time, when you start to, it starts to feel so close you can taste it.
Yeah, it's something like that. And, after a multi-year rally, feeling close doesn't mean that it's 2 days away or 5 days away. You know what I mean? It might as well be still several weeks away. But I really believe that it's almost impossible that 2017 is going to pass and we're not going to have a major sell-off. I feel the chances are extremely low, in my opinion. Okay, so it's a matter of remaining patient and counting the signals. And
you ever listen to Tom Petty?
No. And
okay, well, play this song. The waiting is the hardest part, Tom Petty.
Indeed, that's very true. And you know something? When we get the signal and we're absolutely sure about it, there is going to be a lot of downside left, because this market is not, when it rolls over, it's not going to go 5% lower. There's no chance. You know what I mean?
That's what everyone's looking for. They'll buy that break, but they'll get stepped on that break, I think. They'll buy the first 5% down. I mean, the bull market's been, I would say ingrained after all this time buying the dips. I think people will be trying to buy breaks all the way down, bro.
Yeah, and this is one of the reasons why the fall is going to be spectacular, because as you very well said, after so many years, especially institutional investors and big time traders, their initial response, and for a good reason, is going to be buy the dip. And this kind of mentality, when the market actually rolls over and starts accelerating, is going to fuel the first stages of the fall, because everybody has been gotten used to the first support level, maximum the second support level they have in mind, holding the market, and then the market propelling to new highs. This is a very nice tactic, and it keeps working until one day it doesn't, and then it's a totally different game. And as you said, and I agree with you, we're not that far away from that point.
Yeah, I could taste it. In fact, I could taste it so much, I feel like bursting out in song.
Okay, is this going to be a happy birthday about playing or something else?
If you're lonely, trading on your own, you ought to come to Face Now. Find the trader's home. Say you want to buy a new car, need to get your own house. Well, I have some advice for you, traders. Hang out with us in Face before you click your mouse. Everybody give me an F. A, C, Face, 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 Face.
Well, that's worth some applause. Woo! Applause, come on.
That's a Face theme song. It changes all the time.
By the way, to get back in the market, Stelio, we have retail sales, Canadian retail sales in 15 minutes. Am I right about that?
Yes.
Yes. And what is the consensus? Because I don't want to switch screens because I don't have I'm
Consensus is, well, month on month is 0.3%.
Okay. Okay. So this actually might move the CAD. By the way, Dale and Stelio, don't forget to give me, questions from people so we can start having a look at some of the major and cross pairs. By the way, USD CAD, is still playing out the scenario we had. Same applies with the USD NOK. Despite, and I should add here, despite the fact, and this is one of the things that actually, yesterday was a very quiet day, and in all honesty, we didn't have any major developments. I mean, first of all, we didn't have much volatility, and second of all, we didn't have any major levels break in any of the main currencies we monitor. Same with the stock market. It was a very quiet day. One of the few instruments that actually, gave us some good information was crude. Because if you remember, Dale, yesterday, we were talking about crude, and we said that crude closed the day on Friday, right on important, the 49 level again, like right on this important major horizontal level. So we said that, okay, we can remain constructive on crude, but it remains to be seen what is going to happen from that level. And as you
Steve,
see,
now that you bring up crude, I get like Jim Welsh. We interviewed him once, and I get Jim's technical update, and he was talking about the setup in the COT is real bearish. That you have big specs. The longest they've been, they're even longer now than they were when crude was 100. And the commercials having a very large net short position. So I mean, that's not. Go ahead.
And for people that don't know that, usually when we have a very big difference, a very big gap between large speculators and retails, usually that indicates a turn, and you're very right about it. And that's why that's one of the reasons I'm a little bit skeptical about crude, although I was constructive, from the bottom, if you remember here.
Yeah, so was Nick. So was Nick. I mean, and that was her target, $50. And I remember she called it maybe 3 candles off the low. She got long.
Correct.
And you saw it down there. And that was a 3 drive, wasn't it? Let's see. 1, 2. Oh.
Yes. It was.
How come 3 drives? All I see, even when I'm driving, I see 3 drivers when I'm driving, Stelios. All the time.
It reminds me of the saying about if you are a hammer, you see everything as nails.
Yeah. 3 drive wherever I go. In fact, I used to play golf, and I had to throw out my driver and only use my 3-wood. Yeah, go ahead, guys. I'm sorry. I'm a little silly today. It's the effect of the eclipse.
Yeah, definitely. And I hope you don't become a werewolf during full moons, right?
I've been called a lunatic.
Okay, so
you're on fire, man. You're on fire.
Yeah. What I was saying here is the following.
Show, man.
What I was saying here is the following: that CAD and NOK still look bearish. I mean, USD CAD and USD NOK. So NOK and CAD still behave in a bullish manner, despite seeing a decent amount of weakness yesterday in crude. So obviously, if crude holds this low, which is at 46.50, then I think that the scenario of a new low both in the USD CAD and in the USD NOK is going to easily play out. Now, having to do with crude though, I remain skeptical as long as we don't manage, as long as we keep failing to scale the 49 level. So, for me, it's very important to see what's going to give, is it the 46.50 low or the 49 level? Because that's going to be very important. So, this is one of the markets that since yesterday remain interesting, while other markets have come down, and, we will keep, following it and updating accordingly. So despite that, you talked about the Euro USD falling back into what we thought was a bull flag. Although I have to tell you here that I'm not so convinced that it has done so, because if you go down to a 4-hour chart, and I pushed an update just a while ago about it, if you go down to a 4-hour chart, you will see that in essence, we have not fallen back into the bull flag. We retested it and we seem to be holding it. So I remain a little bit skeptical about if the Euro USD is moving lower. As long as this low holds here and this bull flag resistance that is now acting as support, I remain cautiously constructive, and especially cautiously for one reason, because we have the upcoming Jackson Hole. And we know very well that, central bankers there might provide some news that will create some volatility. The Jackson Hole meeting goes on during the weekend as well, correct?
As far as I remember, yes, it does. It starts on a Friday and it goes on the weekend, yeah.
Which means that we are in a risk of also seeing some gaps following Sunday's open. So, that's one of the things I wanted to say, is that you would rather be nimble, because, you shouldn't exclude the possibility of seeing some gaps in the Sunday open. So, this is one of the reasons that I remain cautious. The technicals tell us that the Euro USD is still bullish. We have absolutely no reason, if we go back to the daily chart, we have absolutely no reason to think otherwise. I mean, this is a textbook bullish price action. We're seeing higher highs and higher lows all the time. As long as we hold this 116 level, I mean, okay, if we want to see the bigger picture, as long as we hold 114.50,
that's where we're going, in my extremely accurate and humble opinion. Draghi's gonna walk away a winner. He's gonna get the market to move the way he wants it to move in Jackson Hole.
Perhaps, although lately, I mean,
I know
Draghi, for several years after he became central banker, he had the magic touch. I mean, the market was literally following him, and like doing his will every single time. But lately, that has not been the case. And something, it's not by accident. I mean, it doesn't have to do with the person. It simply has to do with the fact that when initially Draghi started saying things, he soon showed that his words were not empty. So, for example, he was warning about not betting initially, in the financial crisis, in the European financial crisis, he was warning.
Well, let me ask you this technically, Steve. The high we have at 119, couldn't that have been the end of 3? And you know how messy 4s can be? And 4s can retrace pretty good before the blow-off wave, right?
We can definitely have a deeper correction.
And
there is absolutely no question about that.
Is what I'm asking you. At 119.
It could, but let's put it oppositely. Answer this question to me. From a technical perspective, as long as we remain above, let's say, roughly here, 117, which we haven't managed to close below it, despite making several efforts, okay? Do you have a technical reason to look lower?
Well, you're right. It's a contrarian nature in me. You're much more rational than me. But yeah, and let's not forget how long the market was. I don't think that anyone that was long the euro has had any reason to get out. I agree with you. I just think that Mr. Market's going to be mean to. I just think Mr. Market's going to be mean to euro bulls for a week, you know, and the pros. This might end up being distribution on a 4, so they could take it down and accumulate at better levels. Just my, you know, my trading theory.
No,
I think big money always takes markets up to where they could distribute, and they take markets down where they can accumulate, where they want to accumulate.
Correct. Correct. And as we've said, the Jackson Hole might prove to be a perfect trigger for that to happen. That's why we need to remain very nimble. But when we are
Jackson Hole's Thursday, buddy?
Stelio, isn't it Friday, Saturday, Sunday?
I think it is. I'm checking right now, so give me 30 seconds.
Okay. By the way, give me 1 second. Yeah, I'm just checking the time. So we're 4 minutes away from the Canadian retail sales. So let's not forget to have a look at that. Okay. So yeah, what I was saying, Dale, is the following: is that until we see that happen, we have to respect the technicals, and the technicals for now show us that the euro is well bid. By the way, today we had the drop we see today is, first of all, some dollar strength that we see all over the board. Not a lot, but some of it. And we also had a miss in the Zeus sentiment print earlier on the day. So, you know, some reaction out of it, but, you know, still, it's just a few pips. I mean, that should not scare anybody that's long. And to be honest, as I said, until we see, you know, this bull flag give way, I don't think that somebody should be, you know, really worried about being long here.
Steve, it's Thursday, Friday, Saturday, actually. I thought it was Friday, Saturday.
So we're going to start getting stuff on Thursday.
Yeah.
Okay.
Yeah. Okay. Yeah.
I'm not speaking there till Saturday night about 2 a.m. I'm doing my stand-up FX routine there for Janet Yellen. She's a big fan.
So you're going to be the guy that's going to be causing the Sunday.
I'm hosting. You think I only host this, man? I host a lot of big events in my imagination. You know what I mean?
You have more than what it needs to host, you know, any kind of event.
Oh man, thank you.
By the way, cable, as we had warned several times, cable was apparent that it wanted to move lower, and it's doing so. It has already breached, you know, this flag formation, and I think that sooner or later we will see the 128 test. We almost got there today. We got like 12 pips away from it, but you know, I have no reason to believe that the downside is over. So I remain bearish the cable, but I'm really interested to see what's going to happen from the 128 zone, because
but you wouldn't be short here, would you?
No.
So you're bearish. You wouldn't be short. You're inclined to be looking for reversals to get long. Am I correct?
No, not yet.
Okay.
Not yet. I'm not convinced about that. I'm not convinced about that. I was convinced that this thing is going to roll over, if you remember, from the ascending wedge, and I was also convinced. I was also convinced
what
that
have you done for me lately? Look, you know, we all saw that up there. What about now, man? You know, who cares about what? You know, you're only as good as your last call, buddy. That's a business.
That's very true. By the way, let's go to USD CAD. I think it's a matter of seconds. Let's have a look what happens here. Stelio, can you read me the print when we get it?
It's going to 31.
Yes, I'm here. I'm ready.
Yeah, let's see what we get. Let's go to a 4-hour chart, actually, and see the reaction.
Oh, it's strong. 0.7 compared to 0.3 expected.
Whoa.
Core retail sales.
Yep, and we're already seeing on the 4-hour chart, if you see, we're already seeing an outside black candle, and I think that's going to bring, we already got a bridge of CAD yen to the upside. You know, our first resistance level just got bridged, and I think this will bring us even lower. Okay, so CAD data keep on coming decently strong. Okay, let's see what's going to happen within the next minute, but this bodes well with what we've been expecting. A push to new lows. So okay, CAD data, and by the way, Stelio, we have also Mexican GDP coming in at the top of the hour, right? Just before the interview starts.
Steve, I hate to be, the ultimate contrarian, but Canada is still at this time posting a higher low. You allowed for the option of it peaking up there and pulling back. It's a little deeper than your blue pullback line.
Correct.
But this could still be a B. This could still be a B with a C to come.
Yeah, but don't forget that I made it clear several times that my main scenario is the red scenario, and my alternative scenario is the blue one.
Well, it's just my dollar bias for a C wave up in the dollar that has me thinking that. That's all.
Let's
be dead wrong about all this stuff.
But don't forget, we've said it many times to people. They should always push themselves to consider their main scenario to be the one that is aligned with the trend. Okay, and as a rule,
good tip.
Yeah, and as a rule, this is going to be a rule that is going to serve them well. It's going to help them avoid pitfalls more times than the opposite. So
I agree.
So I think that.
In fact, I'm going to try. In fact, you know what, Steve? I'm going to write that down, and I'll trade less. Okay, now having to do with the USD yen, which is another pair, of interest. Yesterday, it looked like we would actually close below the 108.80 level, which was this low, but once again we didn't. So as it seems, there is some interest, some buying interest at 108.80. It seems that the market is interested in that level. And as long as this holds, I cannot turn like overly bearish, but on the other hand, I haven't seen anything to turn me bullish either. So USD yen is more or less like trapped at the moment at a very, tight range, which is sooner or later going to break. To be honest, after breaking below this triangle, I thought that 106, is a very easily achievable target, and that might still be the case. But on the other hand, the fact that we haven't accelerated lower, makes this a questionable scenario as well. So at the moment, unfortunately, during the past few days, we've had a market that is undecided, that is slow, and that is obviously expecting some kind of a direction. I'm guessing that the fact that we have a lot of macro and political issues being currently developing is something that holds, big speculators from committing one way or the other at the moment. And being the middle of the summer as well, I would advise people not to force trade. I mean, I would love to have, some nice, volatile and clean markets because keep in mind that the more liquidity and volatility we have in the market, the more clean technical patterns you see, so the easier it is to interpret the market and read it and plan ahead. But in this case, that's not something we get during the past few days, and it's okay. Just embrace it as it is, show a little bit of patience, let the market show you,
its intentions. It's not going to take more than a few days, for the market to start showing some direction again, and then it's a good opportunity to take some new trades. So don't get disappointed. Don't just sit behind a desk and feel that you actually need to do something to earn your living, because in this kind of market environment, it's more likely that you're going to get chopped up and actually, instead of making some money, losing some money than the opposite. So that's my advice. Stelio, do we have any questions so we can look over things? By the way,
Arif is asking for gold. That's the only one we have so far.
Yeah, okay. By the way, before I see gold, I just wanted to spend a minute talking about the DAX. The DAX is well behaved. So it did breach below the ascending wedge we were monitoring. We said up here that it's going lower. It did. But the fact that the correction remains well boxed, well behaved, within a descending channel, which is not even very steep, plus the fact that I also see here the possibility of an inverted head and shoulders formation, makes me cautious about the downside. So one word about the DAX. First of all, in the case we have an inverted head and shoulders, the neckline is at around 12,325. So that is an important level to monitor. As long as we don't take that, you should favor the downside, because we have been clearly in a downtrend since the top. But I'm currently cautious. So personally, from a personal perspective, I'm neutral. And if we break above here, I might even consider taking a stab to the upside, because I don't have much of a problem being long European risk at the moment. I wouldn't do the same for the US, I have to tell you. So if I had to be long stocks somewhere, I would easily prefer the DAX than US stocks. So that's about the DAX. Now, having to do with gold, I was about to push an update before. I'm going to do it later, because it's not that I have something very new to say. The fact remains the following here. Gold has been striving with this major area we have been monitoring, which is between 1295 and 1300. And as long as this area is holding, you cannot turn bullish. Simply, you cannot turn bullish, because this is a major area of resistance. So let's say that you are a real believer and you want to go long. Where are you going to put your stop loss? I mean, you won't have a logical place to put your stop loss that your reward to risk ratio will make sense. So you have two possibilities here. You're either a short with a stop above the highs, or if your bias is long but you don't have any commitment to the market, you wait for a break above 1300 and you either buy the breakout or you buy a retest of the breakout level. So that's, in my opinion, those are the logical options you have here. So, for example, gold got rejected in a spectacular way on Friday. I mean, this is a very bearish candle here, because it seemed like we're gonna breach above, and then we completely reversed and closed lower in the day. Actually, this was a key reversal also, not only a shooting star. Now, yesterday we showed some strength, but still we didn't even make it to the 1295, which is the bottom of the zone. Today we're showing some weakness again. The more we fail, the more time we spend up here, but we fail to penetrate above it, the higher the chance that people, I mean, you always have to put yourself in the shoes of people that are committed in the market at the moment. Let's say that you were long gold and you were seeing gold taking stabs of breaking above and failing. When you start thinking like, should I just book my profits here and see what happens? But, this kind of mentality is the kind of mentality that's going to bring gold lower to at least retest, this support resistance zone, which is at around 1257. So I'm very skeptical about gold. At the moment, I don't see the momentum that is required to breach above. I'm not excluding it as a possibility, but you know, how can I tell you to be long seeing this type of price action? So I think that gold, requires one of these markets now.
We'll come down with the dollar pop and the euro pullback.
We'll see. We'll see. But we had a bull flag here.
Part of the jigsaw puzzle, bro.
Yeah. So let's see what happens from there. I know you didn't ask Arif about silver, but since we're having a look at gold, we might as well have a look at silver as well. Silver is even more boring. Just have a look at this. Just have a look at this. Despite these controversial days, because we had like a big sell-off, and the next day we completely retraced the previous day's sell-off. So if you exclude these two volatile days, that one completely invalidated the previous, so in essence, if you look at a 2-day chart, this will simply be like a candle with a long lower wick. Just look what silver has produced. One spinning top, two spinning tops, a short black candle, another spinning top, a doji, and as far as we're concerned today, another spinning top. So silver is telling us that it's also a market that's completely trapped in indecision at the moment between a support and a resistance zone. So silver has completely died down as well. I mean, it's obvious that the market does not know what to do here. Nobody wants to commit strongly to the downside or to the upside as well. And as far as I'm concerned, I still see a bullish setup here. So I see a higher likelihood for a push to 1775, but on the other hand, nothing is happening. So, the silver market is also in need of a push that's going to give direction to the market once again. These two will more likely than not break at the same day. I mean, silver and gold will most likely create some kind of volatile move one of these days, and then we're going to see the markets picking up in volatility again. But we're not there yet. So, patience. Nothing else to do here. We just keep monitoring and, wait for it. So what else did we have besides gold?
Luca is asking about sterling Swissy, saying with euro sterling where it is and euro Swissy heading to 120, sterling Swissy should be a great long at some point. That's what he's saying. I don't know what you think.
I know that I haven't looked at this in a very long time. We were looking at last time we checked it, we were looking at the possibility of an inverted head and shoulders. I can tell you that much from what I see here. I never traded it because, this is not I mean, I doubt I have ever traded this pair actually. But obviously now we have this inverted head and shoulders scenario didn't play out, but we're probably in some kind of a triangle at the moment. I mean, what I see here is this. Let's have a look at it. So, first of all, it's more than obvious that this market is not ready to go anywhere yet, right? Here we are. Okay, so we have spent, just look at this. We have spent like 14 months shopping around in a range that has now become a triangle. So I would say that, let's zoom out and see at the big picture. You see, this is the big picture. Luca, this might end up being like a big bottoming formation, but whenever I see triangles, obviously my first intuition is that the triangle is going to break to the direction of the trend, which means lower. But this has taken too long already. So the possibility, as I said before, of just a big bottoming formation is not unlikely. I think that this is a wait and see market. Let's see what's going to happen with this triangle. Obviously, a break below 122.50, roughly call it, or a break above 128.50 is going to give us the next big move. And when this happens, you know, the market is going to have a long way to travel. So I think that this is one of the markets that you need to monitor. And when you're about to take a trade, it's going to be a long-term one. Because once a market that is stuck for a big period of time gets unstuck, it usually travels a big distance. That's what I think. Thanks for bringing it into my attention. I hadn't had a look at it in a long time. What else, Dale?
Okay, we have a couple of questions on indices. So Catherine is asking about the FTSE and Arif is asking about Dow. And that's all we have so far.
Let's have a look at them. Let's have a look at both of them. Okay, first of all, the Dow.
I'd like to read Scott Lawrence's comment before you go there. Dale, I've been following Blake for years. I'm new to following you, but love your insight. Great stuff, and thank you for being a great servant. Wow, my humbles.
That's very nice of him.
Yeah.
Okay, the Dow is showing a hammer right on the 50 DMA. If Gregor was here, he would also tell you that somebody can easily distinguish an A, B, C, which roughly speaking, you know, C is like, I would guess it's around 127% of A. So, yeah, sure, a recovery from current levels is possible. On the other hand, unless I see a break above 21,850, I would not be long. Because, in my opinion, this market having broken below this ascending wedge, etc., has the potential of making a much larger move, like towards this trend line.
Yeah, under today's low, man, it just kissed that moving average. You know, it almost looks, and I'm thinking we could rally for a few days, but it almost looks like a hope candle, this little update.
Yeah, as you know, so far today, this is a hammer, but, you know,
I'm very skeptical. Hope hammer.
Yeah, I'm very skeptical. I can tell you one thing for sure, is that the possibility of a shallow ABC correction before higher goes off the window if you see an acceleration from here. So if you see some kind of an acceleration from here, then I think you should look a lot lower. Towards 21,000, if not lower, to test this. So today might be like make it or break it a day, today or tomorrow or the next couple of days. Should help us, you know, shape an opinion about this. You know, because as I told you, you always need to be skeptical with very bullish markets. I mean, you always need to initially consider the possibility of a simple ABC correction and a continuation higher. So let's see. Today, tomorrow, the next couple of
why
days.
don't you consider taking half off and moving your stop down to BE? I think that would eliminate the conflict that you're feeling right now. So you take half off, you put something in the bank, and if it keeps running, you're still there. And if it corrects, you recommit with profits. Just a little money management. You can't? Okay. Well, maybe next time break it up and do multiples. Just a suggestion. You're welcome. Go ahead, Steve.
FTSE, on the other hand, has broken the ascending wedge, as we have said a long time ago. It has broken this trend line as well. We've talked about the possibility of perhaps seeing here a longer term top information being developed at the moment, like perhaps a big head and shoulders formation. And as long as we remain below 7,440, I think that 7,100 is an easily achievable target. Of course, this scenario is also going to be helped if we see the 128 level in the cable hold. So if cable holds, for example, 128 and it rebounds, it should also help the FTSE make the next move lower towards 7,100. So, bottom line here, I think that we have no reason to look higher yet. I mean, this might end up being a correction and just a correction, or it might be part of a big top information. But I think that we have no reason to believe that it's over. So I'm inclined to look lower. Okay, Stelio, do we have anything else?
We don't actually have anything more. Let's have a look. No actual questions. So a couple of comments, but really nobody.
We got something from Luca about 10-year yields.
Okay, let's have a look at the bonds. That's a good idea, actually. We haven't had a look at them.
Yeah, Luca's he's one of the bond vigilantes. And now you're getting Euro Pound, which you were smart to avoid so far, Pound CAD and Aussie USD.
Okay, first of all, about the bond. The bond is at a very, very critical juncture. Very critical juncture. I mean, we have this descending trend line, the blue one. We also have the previous high here. So today we're moving lower. If the bond manages to hold this high, there is a possibility of another leg lower after this recovery, which took us a lot higher than I initially expected. I remember the same happened with Luca. He was expecting a shallower recovery. I was expecting the same, and we didn't get one, but we might do that from here. But if this level fails to hold us, then I think that we have to treat this whole formation as a bullish consolidation and look a lot higher. So the bond is at a very critical juncture, and I think it's worth monitoring it closely, because what happens from here might even provide a very good trading opportunity. Now, having to do with treasuries, this market has become a real pain, because everybody was expecting a failure from up here. We didn't get one yet. We didn't get one there. Then we got a double bottom. Then we breached the highs. Then we got this ascending wedge formation, which we decisively break below. I was looking lower when that happened. But then we found a bottom at a place that actually produced no real interest. And we started creeping slowly higher and slowly higher and slowly higher. And we currently lost some upside momentum below the highs that we had up here. But on the other hand, the market doesn't seem to want to accelerate lower once again. So the situation with the treasuries is, very messed up, because the market does not want to commit, especially as long as we have all these geopolitical and political issues. It's a very tough to say that I want to be short the treasuries, because don't forget that the treasuries is the #1 flight to safety. So I think that people are not committing to the short side. But on the other hand, with the Fed still being on a hiking mentality, it's not easy also to see the treasuries produce a new high, etc. So, we keep monitoring the treasuries, but actually this market has toned down a lot. And I think that we're going to need some kind of a catalyst, either that being some macro factor or some big risk aversion move, or for example seeing an improvement in the US economy and the Fed showing some more willingness to actually step on the gas of the hiking cycle. But something has to happen for this market to pick up the pace again, and we're not seeing that yet. Having said that, if I was forced to be short or long at current levels, I would be short. But that was not a trade I would easily take. You know what I mean? Just if I was, forced, I would be short against the previous high.
We have three people asking for Aussie dollar. So maybe we want to have a look at that.
Yeah, sure. And that's a good question actually, because this. Okay. The Aussie is within a pennant. This by default, especially following this move, is a bullish formation. But as long as this 79.60 level is holding, we're not starting the next leg higher. In fact, I do believe that we're going to see a leg higher, but I wouldn't rule out this possibility. Let me draw it out on the chart. So there are two possibilities. Either a push higher above 79.60, which is going to bring a new high, or one more push lower and then this. So bottom line, I'm inclined to look higher for another high, but I cannot guarantee you if that's going to come from current levels or from another test of the pennant before actually seeing this acceleration. But regardless, I'm still inclined to believe that the Aussie USD is not a short trade yet. Okay? That's it. So for me, the critical level is 0.7960. A daily close above that, whenever it happens, is a confirmation that a new high is coming. Now, on the other hand, if we see the second scenario and the dip down here, it would not be a bad idea to try, because the risk reward would be very good. It would not be a bad idea, for example, at a retest of, let's say, 0.78, that would be a nice long opportunity against 77.20. So, that would be like a risk of 80 pips to look for, I don't know, like 300 pips. So I think, the reward to risk would be there for being long. So that's what I think about the Aussie USD.
Okay. Do we have time for one more, do you think? Yeah, there's two or three more questions.
I think we have time for one more question, yes.
One more. Okay, well, Glenn is asking for Nikkei. He was first, so I'm going with him. So,
sure.
Nikkei, if you have that.
Okay, guys.
Dale,
wrap it up with this.
Okay, let me just. Definitely. That's why what I wanted to ask you if we already have. Okay, nothing has changed with the Nikkei. The Nikkei looks at the moment bearish to me for two simple reasons. One, we broke below this ascending wedge, which was very clean technically, and we actually came back to retest it and push lower once again. So I think that the next level to look into is 19,000. I have no reason to believe that we're not headed to at least 19,000 from the current technical picture. Okay, and in general, as long as this intermittent high at 19,840 is holding, you have no reason to look higher. Okay, that's what I think is the situation with the Nikkei, Glenn. Okay, so the rest of the questions, we can have a look at them tomorrow. Who do you have for an interview, you said today, Dale?
It's Kirk Spano. So that's going to be very interesting.
That's going to be very interesting. Okay, I'm going to stay on. I'm going to postpone my next stream, and I'm going to stay on to hear this interview. Enjoy it.
Okay, thank you, guys.
Thank you.
Yeah, and I know, Sal, you're interested in Kirk's view on oil, so it will be part of it. Hi, Kirk.
Oh, yeah.
How are you? I'm making you the presenter. Although you told me you're calling in, so I don't know if you're going to be screen sharing. If you're not, I could just show the markets you're talking about. There you go. Hi, Kirk. How are you? Can't hear you yet.
I just unmuted him because by default they begin muted when they're over the phone.
Okay.
Try again, Kirk.
Can you hear me now?
Yes,
Yes,
Kirk.
yes,
Hi.
we can.
How are you, buddy?
I'm good. How are you doing?
Good. You're on the road?
I am on the road. I went and saw the solar eclipse yesterday in Chester, Illinois, which is a little bit south of St. Louis. And I am in Canton, Ohio right now. And
Okay.
the first leg of what I'm calling the Hall of Fame tour. I'm going to go see the Football Hall of Fame, then Baseball Hall of Fame, and then Rock and Roll Hall of Fame. A little bit of camping in the White Mountains.
Huh. Where's the Traders Hall of Fame?
You know, there is one. I don't know where it is. That's true. There is a Traders Hall of Fame.
Hey, buddy, let me ask you: where you were in Illinois, or where were you saw the eclipse? Was it total where you were?
Yeah, we were at 100% totality, right on the line.
Wow.
It was pretty neat. We got 2 minutes and 40 seconds of totality. Sunset, 360 degrees. You could look at the sun without glasses for those 2.5 minutes. Once it's not in totality, you have to wear glasses, though. Otherwise,
Right.
you know, it's pretty damaging.
You know, I was disappointed, even though it wasn't totality. I went out, and I thought that, you know, everyone kept saying that there would be Coronas there, and I didn't even bring any water to drink because I thought there'd be plenty of Coronas.
Yeah, right. You know, what are they?
Oh, Corona. You mean Corona was that circle around the sun?
Right. You showed up with a couple of lines, and you were disappointed.
A few, buddy. So, great to have you back, Kirk. And is this a new article? Oh, this goes back to July. Okay, so.
But I'm going to tell you a story today when you're ready.
Okay, I'm ready.
You ready? Okay. So this first article talks about the peak oil plateau. I first brought up this concept the June before the oil crash. And I was telling people in June of, would that be now, 2014?
Yeah.
Maybe 2015. I don't even remember anymore. But I first brought up the idea of the peak oil plateau. And to me, what that is when the supply and demand of oil balance. I'm not talking about peak oil demand. Peak oil demand will occur sometime in the 2020s. Hard to know exactly when. I suspect late in the 2020s. It's going to be a very long time before we see electric vehicles really start taking, away from the demand for oil. But
maybe we should set up an interview for them.
To do that, I tell you what, it is a monumental long-term trade. I'm going to give you guys a couple of shorter-term trades, however, that I think you're going to be excited about.
Okay.
So, right now, oil supply and demand are essentially in balance. However, there's a very large inventory, correct? And that's what's keeping prices down. And it's acting, in my opinion, a bit as like a child or somebody pressing down on a spring. And once they let go of that spring, it's going to jump up real hard.
Like pushing a beach ball underwater.
Exactly, and that's what's going on right now. And there's going to be a specific trigger, and I'm about as sure about this as I can get. I talk about the missing risk premium in oil in a different article that I'm showing on Seeking Alpha right now. And I wrote about this on Market Watch a while back as well. So
yeah, I was thinking about you now that Trump is considering saying that Iran is not complying. And I know this is, it seems like it's all leading up to your prediction.
Right. So let me tell you a story. I was at this place. I know this story. And what I'm telling you is pretty true as far as I can tell. And I'm going to fast forward here to something that really got me thinking about this again. I was recently at the annual meeting for a company, and I was at the bar of the hotel. I like to go to bars. Good place to meet people, to get a little bit oiled up, to get information from them. And I happened to have a gentleman sit down next to me who is one of the Republican Party kingmakers. I'm not going to say who it was, but this guy, if you watch House of Cards, this is the guy. This is the guy that makes people president or senator or governor.
Oh, he's like a kingmaker. He's like a kingmaker.
Absolutely. He sits down next to me. He orders a whiskey rye old fashioned, and I'm in Wisconsin, and I turn to him and I go, "You're not from around here." He looked at me, "How would you know that?" I said, "Because if you were from around here, it would have been a brandy old fashioned." And it kicked off a real good conversation. You know, he didn't spill the beans on anything, but I was able to just kind of needle in there a few times. And at one point I said, you know, a book that I'd really like to write would be from the standpoint of a fly on the wall for every room that Dick Cheney has ever been in. And he says to me, "I've known Dick Cheney 40 years. And, you know, I said, and he says, why? And he says, he's the real deal. He's been involved in everything for 4 decades, 5 decades. Why him? I said, because Dick Cheney is the long game in America. He has been involved in all the things that, whether you like him or dislike him, he's been involved in many of the things that have gone on since the early 70s, maybe even a little bit before that. And included in that is the Saudi Arabia petrodollar deal. And all of your traders, I'm sure, are very aware of what the petrodollar is and the fact that it's probably going to become threatened in the not too distant future. So, you know,
it's going to be threatened. Is that what you said? It's going to be threatened?
Right. The petrodollar isn't going to remain the only currency that oil gets traded in much longer. And in fact,
okay. So what are the Saudis going to depeg during this? Even though we're allies, probably against Iran, you think they would depeg?
I think early in the next decade, they repeg. I think that they switch over to the IMF basket and they start trading oil in a basket.
Like an SDR.
There's a special drawing rights, exactly. So when you take a look at the balance there, you can see what the impact on the dollar will be, right? So the yuan, you know, the renminbi, whatever you want to call it.
Yeah, it's going to be based on a country's GDP to debt ratio or something, isn't it?
Along those lines, you know, who knows? The IMF changes their mind on things all the time. So, so that's
like
just
a brave new world, buddy.
Right, absolutely. So you put that in the background, that there is a long game on oil. And when I was in college, I got to work with a great professor. I was on his research team. I was the only undergrad. You know, they were grooming me to be the next, you know, super grad student. I ended up getting married and making other decisions. But I got to spend a year and a half working with these folks and studying how the Middle East worked all the way back to the 1950s and the post-World War II era, right around World War II, up to the present. After the first Gulf War, there were, and here's the story, after the first Gulf War, there were a number of research teams around the country, probably hundreds, that were writing scenario papers on how the Middle East conflict was going to work out after the first Gulf War. And we have been getting oil from the Middle East for 2 reasons. The first reason was we needed it. So we cut the petrodollar deal. And in return, we protected Saudi Arabia from Iran. The wall between Saudi Arabia and Iran turned out to be Saddam Hussein. He was that wall. The reason we didn't topple him in the first Gulf War was because he was what kept Iran from encroaching on Saudi Arabia.
Sure, they fought a war with each other.
Absolutely. So the paper that we wrote, or I should say that I got to pick up books for and deliver coffee for and do some copy editing on, you know, I was not the I was not getting to do any of the serious research, but I was getting to read what they were doing as a team. And this paper, along with hundreds of other ones from around the country, go to the Pentagon, I presume through the Defense Intelligence Agency, and they studied his scenario papers. And it's not that this paper was the only one that said what it said. I'm sure there were dozens, if not hundreds, of other teams that wrote similar papers. And the story went like this. At some point, Iran is going to become an even bigger problem. This is back in 1992 that we're writing this. And ultimately, there has to be an end game with Iran because they want to be a regional power in the Middle East, and their ideology of converting everybody to their sect of Islam is just not going to fly. Recently, Mohammed bin Salman, the new crown prince, said as much, but he said we can't negotiate with Iran because their philosophy is that they have to convert us and take us over and make us ready for the hidden Mahdi, which is
right, the Shia prophet.
Exactly. And so you have now, after 9/11, if you'll remember, and this all goes back to this paper, we predicted roughly how these things would happen. One of the predictions we made was that eventually the United States would have the technology to get the oil that we knew was here. We've known there was a lot of oil in the United States since the 1970s, but it was expensive to get. We didn't know how to get oil from the shale. We started to figure that out in the late 90s, early 2000s. And after 9/11, George W. Bush said, look, the war against terrorism is going to be a long war. You started to see a series of events unfold. The first one was the realization that, and you can study the report that came out, is that Iran was largely behind 9/11. They went through disaffected Saudis, funded them, influenced
So why did Bush pick the easy target?
Okay, so here's why he picked Iraq. At this point, I think, hard to know, George W. Bush wants Iran and Saudi Arabia to eventually get into a conflict. So you get rid of the wall between them. That's why they went after Saddam. They used the chemical weapons, which turned out did exist. Assad just used them against his own people. We just couldn't find them at the time. So it was an excuse to go into Iraq because he wasn't going to say we want to set up chaos and war in the Middle East. He's not going to say that. What he says is there's WMDs in Iraq. The media falls for it. They don't find the WMDs. The media focuses over here on the WMDs. And they never focus on the idea that, look, the destabilization in the Middle East now is going to pit Iran and Saudi Arabia against each other at some point as Iran's influence grows through Iraq. Iraq at this point is largely a satellite nation of Iran. You know, we have influence there, but Iran is more influential than we are, and we have deliberately allowed it to happen. This idea that this was an accident, that this was a mistake, it's wrong.
Okay, so you're saying that early withdrawal that caused a vacuum that led to ISIS, and basically Iran sat by for, I don't know, 5 years and watched us take out their enemy, the Sunnis, and that we deliberately left a vacuum for them to fill for this situation that's manifesting now.
So that Saudi Arabia and Iran would have to have a conflict. I mean, it would be ideal if they would negotiate, but you know that they're not going to. So there's going to be a conflict. You have to remember, we didn't kill all the Sunnis. Most of the Ba'athists who were in Saddam's army, they formed the backbone of ISIS at this point. They're truly not terribly ideological.
Yeah.
They are very, very good at propaganda, and they're angry. You know, they're angry more than they are religious. And they're using religion to bend people, which, you know, is a tried and true method going back to thousands of years of humanity, unfortunately. So flash forward to today. We are at a point now where the conflict between Iran and Saudi Arabia is, I'm not sure if you can quite say imminent, but it's closing in and it's closing in quickly. There used to be an Arab, pan-Arab coalition that basically was stood against Israel, correct? Well,
right.
now the pan-Arab coalition stands against Iran. You have Saudi Arabia, Egypt, Jordan, and the Gulf Cooperative Nations, along with the United States, along with Israel, forming a coalition against Iran right now. It's been going on for 7, 8, 9, 10 months now. When would you have ever believed that Israel would be in a coalition with Egypt, with Saudi Arabia, with Jordan, with the Gulf?
The enemy of my enemy is my friend.
Exactly, Dale. So, what does that mean for us? One, there's something bad that's going to happen in the Middle East from a moral standpoint. People are going to die, and if you choose to not make these trades, I understand. And it is the way of being an investor to be opportunistic. So I'm going to give you the opportunities that I see. Now, when this conflict in the Middle East flares, and I believe that the flashpoints will be something along the lines of Iran is caught in an incursion somewhere in Syria or Iraq. It probably won't be that serious, but it'll be played up to be serious. Maybe it has something to do with Yemen. So we're going to catch them red-handed at something, or we're going to catch them red enough-handed and call it red-handed. And that's the way it's going to go down. That is the way that it always goes down. So anybody who
all we have to do, Kirk, is send our Navy into the Straits of Hormuz, and they'll run into something.
Right. What is that, 20-25% of the oil on the planet?
You know, I mean, they're running into everything. All we have to do is place them there. They'll run into those patrol boats. But
right.
Okay. Do you have any kind of like time frame you think this might happen? Maybe if the market sells off 10-15%, or there's more heat on Trump with the investigations, that would be a pretty good distraction, don't you think?
Right. So, you know, Russia plays into this. Russia is normally a protector of Iran, but Vladimir Putin and the Russians do not like the Muslim Islamist influence in their own country, and really don't see Iran, the Ayatollah, and the mullahs as natural allies. I believe that when this conflict starts, Putin is going to say, you know what Iran just did is out of line, and we're going to stand down. I believe Russia will stand down. Why would they stand down? China's not going to care either. Okay. You know, China never goes beyond their own borders, really, with anything other than economics. They haven't sent troops anywhere. They don't believe in it. They don't want to be.
Why are they building the islands?
Those are buffers. You know, those are buffers. They believe that we've been incurring on their zone. You have to remember the psychology of nations. Russia and China have been invaded a number of times over the millennia, and they're paranoid about that. That is part of their culture. You know, in the United States, we have a different culture. You know, we have this very independent-minded, libertarian almost ideas that comes from us being revolutionary. So we look at warfare a little bit differently than they do. Warfare brought us our freedom. Warfare for the Russians and China suppressed them. So they want to just keep people out in general. Now, the communists have been clearly more expansionary in Russia, but it does all go back to providing a buffer around the motherland. So keep that in mind. You know, these are topics that I've studied pretty well. There's very smart people out there who say what I'm saying. So you don't necessarily look at people as enemies. You just look at them as having motives. And Russia is looking at Iran as a potential natural ally if they can get the Ayatollah and mullahs out of there, because the people of Iran, especially the city people, the folks who have, you know, first world jobs and education. You know, I'm very good friends with an Iranian.
Yeah, they want to be Americans, you know, people.
They're right. Iran used to be a very Western country, and it's probably going to happen again. But remember, Russia's motive is that they want more expensive oil. Russia has been getting hurt very bad by the cheap oil.
Right.
And ultimately, they need that money because they have not diversified their economy. Saudi Arabia wants to diversify their economy too. They have a motivation for more expensive oil because they're going to IPO Saudi Aramco and they want the extra half.
Hey, do you know when that's going to hit the market, Kirk? I've asked everybody.
It looks like late next year.
Okay.
Yeah, they put it off a little bit, but I always said second half of 2018, and I'll stick with that. So there's things that have to play out. Now in America, we want more expensive oil because we're starting to export oil and natural gas. I was just in Southern Illinois. I was taking a look at, I forgot all about the oil down there. I'm staying at a hotel now in Canton with a whole bunch of pipe fitters that are building the pipeline from Michigan to, I believe, Pennsylvania to deliver oil. The oil industry in America has become very efficient, but it's also ramping up again in certain spots. The Gulf of Mexico just put out some leases at a discount to get the drillers in the Gulf of Mexico to go after the shallow water again. They want 2,000-foot wells, not 2 to 3 and 4 mile wells, because those super deep wells have to be mega projects. It's 8 years. The shallow wells, they can get up and running in under 6 months. They're cheaper. They're almost like offshore fracking when it comes to looking at it from an expense standpoint. So the United States is ramping up our oil industry still, even though it's in a much more controlled way. We still have supply going up. We're probably going to be able to pump out nearly 10 million barrels a day by the end of next year or the year after. So you take all these things, financial motivation, the conflict between Saudi Arabia and Iran, the fact that we have a president who seems, to me, hell-bent on getting to this war sooner than later, and they've been preparing for this war with Iran by making sure that we have the ability to withstand a setback in the supply of Middle Eastern oil. When this war happens, not only do you have the Straits of Hormuz that might be shut down for a while, and it would be less than 90 days. I suspect it would be less than a month. But that would be enough to impact inventory.
What did you say about less than a month? The conflict would last less than a month?
I do. I think the conflict will last less than a month. I think the Straits would get open pretty quick. But there is infrastructure in parts of Iran and Iraq, and oil wells, pipelines, a refinery. You could see a disruption of up to 4 million barrels a day of Middle Eastern oil when this war happens. The Straits of Hormuz would not stay closed long, but the flow of oil could conceivably drop up to 4 million barrels a day for up to 2 years.
Wow.
The supply of oil right now is roughly 97 million barrels. Demand is roughly not 97 million barrels. And the inventory is about 250 million barrels too many, so 250 million barrels. If you took away 4 million barrels a day, you could do the math. It only takes about, 70 days to get rid of the entire 5-year above the average oil inventory. We could go into shortage within 6 months. That would create a recession. So you have to take a look at these in multi-parts. They're preparing to withstand a shallow recession. And I'm pretty sure it's going to happen sooner than later. And it was going to happen whether Donald Trump won or whether Hillary Clinton won. They were both going to finish off Iran. I suspect Hillary would have waited until the year that she was supposed to get reelected, because she would have used it as a whole don't change horses in midstream. You're in a war, you have to let me play it out. And that's the way that, politicians have done it. Donald Trump, I do not see running for president again. I don't believe he likes the job. I don't believe he ever intended to run again. I believe, having watched what they've done in setting up a media company, I don't know if people understand this, but before Trump won, the Trump son set up a media company because they figured they were going to lose. Well, they won, so the plan changed. But there's going to be a media company, Trump Media, I don't know what they'll call it. Once President Trump is no longer president, they're going to go to war with Breitbart. You know, Breitbart, now that Steve Bannon has left, they've already said that they're going to go after the White House. You're going to see a whole new sort of independent populism come out of the Trump tribe. And whether you like them or don't like them, the fact is that they are probably in it for the money. I think probably you might see something come out with Russia about that with some of his people. I don't think President Trump had any connections to Russia on money, but what do I know? It could be. But you're going to see more people like Flynn who compromise themselves. So here's the trade. The trade is this. The war with Iran is coming. When does it come? I think next year. I think it'll be spring of next year. That's my guess. That's the soonest time frame. But it could be as late as the spring of 2020. So you've got this window, spring of 2018, the spring of 2020. What happens in a war with Iran? What currencies go up? You're going to have a flight to safety, correct? So here's where your currency traders can make a lot of money. There is this idea that the dollar is going to keep going down from a lot of people. I've watched some of your seminars. You know, you're bumping into different levels.
You like them? You like them?
I like the dollar?
No.
Or the last guy?
The webinars.
Yeah. No, you know, I'm a busy guy, but I try to flip into these once in a while. I'm the guest with the round head. So, yeah, you know, I watch them on YouTube. Yeah, okay. You know, the dollar is going to surge. The Swiss franc will surge. You know, you'll have other currencies that surge. And if you guys can use your charts and read the news with regard to Iran, you may be able to make some amazing futures trades. So, you know, I'm not the technical guy on that, but you should be aware that that is where you're looking for the flashpoint. And if you can combine that knowledge with good technical expertise, you know.
Yeah, technically right now, Kurt, the COT setup is pretty bearish. You have large specs, longer than they were when crude was at 100. You have commercials short. Maybe we get a chance to buy this market under 40 in the next several months.
Right. So I'll leave the currency trading to you. You know, I'm a retail.
No, that's guy. Oil. That's oil.
Oh, right. The oil, right. So the COT. So with the oil, you can do the futures trade there too. Yeah. I screwed that trade up when I predicted the crash in oil. And I shorted a bunch of the oil companies. In particular, I shorted Rig and I shorted Seadrill because I knew that deep water was the target to get rid of long-term competition.
Right.
You know, at this point, I'm looking for a futures trade where I can make a lot of money on currency and a lot of money on oil. The problem for me is I'm a retail guy. I don't have a lot of clients who use margin. So I have to go into the retail side of the market and use options on oil companies. And there are a number of oil companies where we'll be able to flip the switch because you're going to have this temporary situation where the dollar gets stronger and oil, because it'll start to strengthen as well, is going to go up. But then once the petrodollar ends, or is not really ending, but it'll be lessened, once the petrodollar is less strong, then you're going to see oil prices surge. So over the next 3 years, I would expect to see the dollar rise on this conflict, maybe the yen, the Swiss franc for sure. I think gold will probably get a fear rebound, but I don't put a lot of value in gold. I don't think you're going to see it at $2,000 or $3,000 an ounce or anything like that. Maybe $1,500, $1,600. You know, there is. Does the stock
market like it for a while because the oils have been the weakest group?
I think that because the dollar will get stronger, most of the market will get beat up, right? Unless you're trading it from, a different shoreline. But, you're going to see the oil stocks go up, and you're going to see, in particular, the highly leveraged oil stocks go up. There are oil companies out there, and I'll use Chesapeake. I have Chesapeake on my list, and it's a very speculative pick at this point. Chesapeake only survived past 2019 if the price of oil gets to about $60 a barrel and about $3.50 per million British thermal units of natural gas. So that's a company that, if the price of oil surges, goes from being a potential bankruptcy candidate in 2019 to being worth a lot of money, because they are still the second biggest natural gas producer, like 13th or something for oil. And they're very, very highly leveraged to a price change in the price of oil. Chesapeake is interesting because a lot of their hedges come off at the end of this year. I'm not so sure that they're going to re-hedge as much of their book. I think Chesapeake Energy, I know their management. I believe that Chesapeake Energy is going to gamble their survival next year on the price of oil going up. And if they have to declare bankruptcy in 2019, they'll shrug their shoulders, say we tried, and they'll turn the debt holders into the new shareholders.
Okay.
There's other companies that are less leveraged. I wrote an article about Encana. Encana's in a great spot right now. They have great acreage in the Permian Basin. Occidental Petroleum, I've mentioned, they're beaten up. You've got companies like Helmerich & Payne. And I know that as a futures trader, a margin guy, you may not look at these companies too much, but the reality is that some of these companies are leveraged so heavily to oil and currency.
Yeah, you could get a 10-banger out of them.
Right. You can use those as proxies.
Yeah. All right. So what's the best way for people to follow you, buddy? I know your Twitter handle, but if you want to show your blog, how they would get there. You write for Seeking Alpha.
I have switched from Seeking Alpha over to from Market Watch over to Seeking Alpha.
Okay.
So I would say just go on, find me on Seeking Alpha. I have a premium research service here that if you buy it for the next, I'm going to extend this, but I just opened this. I did it over the summer, dog days of summer. Probably only have a couple hundred people subscribing. I've got this for $250 a year right now, if you're one of the founding members. And we have a list of 20 stocks. I'm doing more work on energy. But this trade, whenever it occurs, is going to make people rich. Bottom line, you have people in your room right now that are going to make such good currency and oil swing trades that they're going to turn $1,000 into $100,000. And you and I both have seen it happen. Somebody's going to make these great swing trades, and they're going to say, Dale, thanks a lot, I'm retired. And that's the way it's going to go down. For me, I love doing this, so I won't retire. But I expect even on the retail side to make between 400% and 500% on these trades, and maybe it'll be 1,000%.
Well, Notes for Pinkert says 38 to 34 sometime in January. Buy it.
Yeah, that's when you're targeting it.
Yeah. Okay, so great update, and do you think there's a possibility it could start this winter? You don't think it's going to could start this year, huh?
Maybe. The month.
What makes you say spring? Because a lot of wars happen in October, at least because that's when people get all jazzed up with their high holidays in October.
In the Middle East, most wars actually start in spring, and it has something to do with weather. It used to have something to do with weather. Has something to do with the holidays. I don't know that it's a strong enough correlation, but I don't see anything with Iran taking off this year. Could it?
Okay.
It absolutely could. If you can afford to carry the trade, then maybe you should do it. Most people don't have the capital to carry the trade. But if you have
I think maybe the charts will tell us. If we get to those numbers sooner rather than later, I would say most likely it's sooner. If it takes a while for them to get there, I think the markets will tell us, don't you?
They might.
You know,
and
the market will get hip to it before it happens. It's not going to be an overnight deal, do you think?
Correct. Yeah, I think you'll have several weeks to get your trades on. You know, the Saudi Arabians bet against the price of oil a few months before they drove the price of oil down. Keep an eye on them, right? So, you know, take a look at the way that the futures action moves, because there are big dark pools of money out there, and you know this, that will influence the way things go. I trade pivot points and reversals. I don't really follow a lot of trends because I know there's so many liars, cheaters, and thieves out there. You can follow trends if you're day trading, but, you know, like I said, I handle retail money, so I can't do that. But, you know, the technicals will tell you when the trend is going to reverse, right?
Yeah, I think so. We could count on that if there's anything to count on. So, Kirk, thank you, buddy. I hope you enjoy the rest of your road trip to all the halls.
I'm gonna go stand next to Brett Favre's statue and you know, rub his shoulders or something.
No one will ever break his Ironman record.
No, I don't think so.
Consecutive games and it's so great, even though it's preseason, to see guys out there and hear the sportscasters again. Some people count their life by Christmases. I do it by football seasons.
There you go. Hey, I grew up watching the Packers when they were really bad.
Yeah.
When Don Majkowski, who was pretty good, got replaced by Brett Favre, I was like, who's this kid? And in like his second or third game, he had that iconic comeback against Cincinnati. I got to watch his entire career. And yeah, he was a little reckless, but he carried that team for years. And he's just an amazing, amazing talent. You know, and then we get blessed with Aaron Rodgers afterwards.
Yeah.
You know, if I have
all I could say is better than being a Bear fan because we've never had a quarterback. So, yeah. Well, buddy, enjoy
I'll never complain.
Enjoy and maybe you know, give me a holler if you're starting to see some things that you want to share. And
I'm gonna keep track of you because you guys are one of my sources on the reversals.
Okay, buddy. I'm glad to serve. You know, our mission here is to build up and edify traders every day. I'm glad that you find some value stopping in and checking us out. And have a great trip, buddy. And I'll be glad when the adults get back from the Hamptons.
Yeah, right. All right. You take care. And hey, I would just reiterate, somebody in your room is going to have life-changing wealth on this trade, on these trades.
Okay, I vote for that to be me.
Or a lot more than, it might be a lot of people.
No, I want to be selfish.
You want it all, huh? Dale wants it all.
It's my turn, guys, right? All right. All right. Thank you, Kirk, and thank you, Face. See everyone tomorrow.
Bye-bye.
You're welcome, Tom. You're welcome, Peter. Enjoy. Summer's waning. Enjoy it while you have it.